If you've ever stared at checkout on Qogita and wondered why sometimes VAT is added and sometimes it isn't, you're not alone. It can be confusing, and when you're dealing with thousands of euros in orders, you need to know exactly what you're paying and why. But once you understand how VAT works in practice, it's actually pretty straightforward. And more importantly, your final cost is always the same, whether you pay VAT upfront or not. Let's go through 4 real scenarios that cover the most common situations EU buyers face on Qogita. Let's say you're in Germany, ordering from a German supplier. Your cart shows 1,000 euros worth of products. At checkout, German VAT of 19% gets added automatically, so you actually have to pay 1,190 euros. Your invoice will have this 190 euros VAT clearly listed. So when you file your VAT return with German tax authorities, you will get the 190 euros back as input tax. As you can see, at the end of the day, the net cost to you is just 1,000 euros. Simple, clean, and just like any domestic business purchase. Now let's see what happens when you order internationally. Let's stick with the example that you're in Germany, but this time you're ordering from a French supplier. Again, you have the same 1,000 euros in your cart. But watch what happens at checkout. No VAT is charged, so this time you just pay 1,000 euros. Your invoice will show this as an intra-EU supply with no VAT. Now this is important. You'll need to do a reverse charge on your VAT return. You'll have to declare 190 euros as output tax, as if you were charged yourself. Then immediately claim 190 euros as input tax to reclaim it. These two will cancel themselves out and you will end up only paying the net cost of 1,000 euros. So it's the same end result, but better cash flow because you didn't pay VAT up front. Moving on to exceptions for orders from the Netherlands. This time, you're in the Netherlands and you're ordering from anyone in the EU or UK. It doesn't matter if your supplier is Dutch, French, or Spanish because Qogita is registered in the Netherlands. And you'll always have to pay the Dutch VAT. See this example. Your cart total is 1,000 euros. Then you will be added 21% Dutch VAT at checkout automatically, which means you'll have to pay 1,210 euros. This 210 euros VAT will also be shown on your invoice. Next step is going to be noting this 210 euros as input tax on your VAT return. So you can reclaim that money and have the net cost of it just being the 1,000 euros. It's just like making a domestic order every time. Now, what about those of you who are only buying internationally? And Qogita isn't registered in your country, which means you can only order internationally and you decide to order from an Italian supplier. Well, in your cart, you will see 1,000 euros. And when you go to checkout, nothing is going to be added. So you'll pay 1,000 euros with no VAT charged. Later, on your Swedish VAT return, you'll have to apply a reverse charge by declaring Swedish VAT as both output and input. This will cancel each of them out, meaning that your net cost is still 1,000 euros. This is the best option to maximize the cash flow benefits because you will be paying 0 VAT each time. Have you noticed the pattern by now? Whether you pay 1,000 euros, 1,190 euros, or 1,210 euros at checkout, your final cost after VAT returns is always going to be 1,000 euros. So the only difference is timing and paperwork. If you pay VAT at checkout, you will have simpler paperwork, but your cash will be tied up until your VAT return. And if you have no VAT at checkout, well, then it's better for your cash flow, but you'll have to do a reverse charge admin on return. The point is, both paths lead to the same destination. So are you ready to put this into practice? Start exploring suppliers on Qogita with confidence. And if questions come up along the way, visit help.qogita.com or chat with Maggie, our virtual support agent, directly on the Qogita website. Happy sourcing!